Hey everyone! Welcome back to Millennial Commerce, your go-to channel for everything finance, marketing, and economics. Today, we're diving into a topic that's both exciting and essential: the stock market. If you're a beginner looking to understand how the stock market works in India, you've come to the right place. Don't forget to like, share, comment, and subscribe to Millennial Commerce for more insightful content. Let's start with the basics. What is the stock market? Simply put, the stock market is a marketplace where shares of publicly listed companies are bought and sold. In India, the two major stock exchanges are the Bombay Stock Exchange, BSE, and the National Stock Exchange, NSE. But why should you care about the stock market? Well, investing in stocks can be a great way to grow your wealth over time. Remember to like, share, comment, and subscribe to Millennial Commerce if you're finding this information useful. Now, how does the stock market work? Companies list their shares on the stock exchange through a process called an initial public offering, IPO. Once listed, these shares can be traded among investors. The price of a stock is determined by supply and demand. If more people want to buy a stock than sell it, the price goes up, and vice versa. It's important to understand that stock prices can be influenced by various factors, including company performance, economic indicators, and market sentiment. Okay, so you're ready to start investing. Here are a few steps to get you going. 1. Open a Demat and trading account. You'll need these accounts to hold and trade shares. Many brokers in India offer these services. 2. Research. Before buying any stock, research the company, its financial health, and industry trends. 3. Diversify. Don't put all your money into one stock. Diversifying helps manage risk. 4. Invest with a plan. Have clear financial goals and an investment strategy. Are you investing for short-term gains or long-term growth? And don't forget, always like, share, comment, and subscribe to Millennial Commerce for more tips. Here are some key terms you should know. Bull market, a period when stock prices are rising. Bear market, a period when stock prices are falling. Blue chip stocks, shares of large, well-established, and financially sound companies. Dividend, a portion of a company's earnings distributed to shareholders. Portfolio, a collection of investments owned by an individual or institution. Understanding these terms will help you make informed decisions. Like, share, comment, and subscribe to Millennial Commerce for more educational content like this. Now let's talk about some common mistakes beginners make. 1. Lack of research. Not doing proper research before investing. 2. Emotional investing. Making decisions based on emotions rather than logic. 3. Chasing trends. Investing in stocks just because they're popular. 4. Ignoring diversification. Putting all your money into one stock or sector. 5. Not having a plan. Investing without a clear strategy. Avoid these pitfalls to increase your chances of success in the stock market. And once again, like, share, comment, and subscribe to Millennial Commerce. That's it for today's video. Remember, the stock market is a powerful tool for building wealth, but it requires knowledge, patience, and discipline. If you enjoyed this video, don't forget to like, share, comment, and subscribe to Millennial Commerce. Stay tuned for more content that will help you navigate the world of finance, marketing, and economics. Until next time, happy investing!